Good morning, folks, and welcome back to Almus Market Mornings. The focus for markets and for Asia remains on the fate of the Hormuz Strait. It's the narrative we have been discussing for some time, but it's also one of the most important pieces of area for Asian energy. Oil prices, Brent specifically, is above $100 as the strait remains mostly closed, and there are second-order impacts that's already being seen. For example, due to limited LPG supply being provided to commercial industries in India, aluminium can makers are facing problems. Beverages with aluminium cans, including the famous Diet Coke, are facing shortages in metros. While this is a minor thing, there are many bigger shortages that may develop in case supplies remain impacted. Uh, Good morning, JK. I know we are essentially discussing similar things in the last few days. Do you feel things have worsened than before? Because earlier, at least some ships were passing through the strait. Now it seems there are none. Like, what is your sense of things?
Yeah, good morning, Swaraj. Yes, yeah. Say the longer it continues, the larger the problem it's going to be for economies who are particularly import dependent for crude oil and natural gas, and that is what is being reflected in the Indian businesses and industries also. See, day for yesterday, Trump announced a ceasefire, and it's a you can say that it is an uh, uh, long-term ceasefire. There is no time limit. It will be extension, indefinite extension until they come to some sort of agreement on peace. But then, what was more important was that they continued the blockade of the ships. And Iran then retaliated by saying that so long as the blockade continues, they are not going to open the Hormuz Strait. So it's actually worse stalemate now. Well, as you rightly mentioned earlier, at least the selective passage of ships were happening, and now even that is not happening. More particularly for India, initial days we did see at least 5 to 7 ships had crossed over, and we had got those supplies. But then, with the complete closure, it's going to be a bigger problem for us also. Now, while ceasefire means that there will be no, attacks or something, but it was not totally incident free. There is a report that in Iranian gunfire hit 2 ships in the Hormuz Strait area. They also seized vessels in the area, making a clear escalation in the maritime tensions as well. Uh, there are various versions. Pakistan, who is the chief mediating country for peace talks, is still optimistic, and they're trying to persuade US to stop the blockade so that it could pave the way for peace talks. Some reports also indicates that uh, Trump said the talks can probably resume in the coming days. So it's a wait and watch for the market, very uneasy wait and watch period for the market, because it can go either way. It can be like a total stoppage of talks and then a re-escalation, or if the talks do happen, then we could have a de-escalation and some sort of a relief for the market. So, but just going by the oil price, it does look like the market is preparing itself for a prolonged stalemate, and that is what is hurting the markets as well. Yesterday, in fact, even the stock markets were, not continuing their rally, and even the US markets were subdued, and Asian markets today are negative. India also gave up some gains yesterday. I think while we watch this, Rupee has further weakened. 93.80 was seen yesterday. Yes, as I mentioned in yesterday's update also, as we approach 94, there is a very likelihood that RBI with their increased reserves now can come in with intervention, and the intervention did happen yesterday, not in a big way, but at least the weakening trend was halted. It doesn't mean that 94 may not be seen, but then market is also kindly skeptical, somewhat skeptical that they, apart from intervention, there could be some more measures which may be on the way to curb the excessive demand from the market. In what form and fashion it will come is something that we need to wait and see. So there will be hesitancy to push the dollar rupee too far higher from these levels, unless there is a re-escalation or oil price crosses 105, currently trading at 102, and all that. Also what this current situation is triggering on a medium term, or you can say the long term basis, is every country is now preparing itself for more and more renewable energy and domestically produced renewable energy sources, and lowering their dependence on oil as well. So that is something. And in India specifically, apart from addressing the high import dependency, there's also some talk in the circles that there could be some easing of rules for FI investments. Not really an official, but then the market is thinking that there could be some way in which the government will incentivize foreign investors to resume their commitments to India, and that actually depends upon certain relaxations that they are looking forward to. So these are some things which will be more long lasting, and that can actually help the rupee. Mere intervention is not going to help, because we still have dominance of import buying over the exports, and exports are anyway not hedging, and they are mostly taking cash rates only. So we have to. It's really again a wait and watch scenario as far as the Indian markets are concerned. Globally, dollar has somewhat strengthened, more kind of profit taking, or some sort of testing of the higher end of the range for the dollar, but nothing to really ignite a big dollar rally. In fact, as we head into the end of the month, we could see some more positioning, which can lead to a dollar weaken again towards 98 levels as well. Data from Japan recently has been good. The trade numbers were very strong. Today, their manufacturing PMI also came strong. So there is less case for Bank of Japan not to hike rates, although indications are that in April they would keep the rates on hold, but in June it can be a hike that is more likely. And ECB again, ECB, UK, and even US, all of them are expected to hold the rates when they meet next week. In fact, next week is going to be a super central bank week, where many central banks are meeting for their policy decisions. Everyone, I think, is mostly keeping data dependent approach, still thinking, the moment the war ends, the inflation could fall back to the previous level. So that is the anticipation. However, I think if the war continues beyond April into mid-May and all that, I think very well we should expect a hike in June from the central banks. So dollar is on a holding pattern, moving between 98 and 99, and we should be looking out for some definite clues, either from the war front or from the economy, or but more particularly the monetary policy, for dollar to get really move, a real move on the upside or on the downside. Thank you.
Thank you, JK. And yeah, we are all closely following the war updates. It seems like an uneasy wait. Now, risk assets like stock markets, they are not continuing their rally. US markets were also subdued yesterday, and Asia today morning looks lower. Of course, countries who are importing energy are impacted, because the stalemate seems to worsen, because now there are no ships that are coming through. Yesterday, also, Iranian gunboats have hit a few commercial ships and seized a few. So things are not looking good. So there is one eye on the war that's there. Otherwise, rupee has weakened further towards 93.80. As we approach 94, as JK mentioned, the RBI is likely to intervene to support the rupee from weakening further. There is also some unofficial chatter that government is looking to incentivize foreign investors to bring in some capital flows. As one of the themes we have been discussing on the podcast is the lack of capital flows into India, and that may be looking, the government may be looking to sort of provide some relief to foreign investors to, in terms of some relaxation to further bring in that money. Otherwise, the dollar index remains in a range, but saw some minor strength yesterday. That's it from us today. Thanks for listening. We will catch up tomorrow with a fresh round of updates.